All right, we're back for another episode of the Mortgage Show. Been a couple months, Beds. How you doing?
That's as good. How's Randy?
Doing good, bud. I'm excited to be recording a pod with you.
Where have we been? Have we been
I don't
busy?
know, dude. We've been busy mortgaging. It's nice that we found some time to make it happen. There's a lot to talk about.
We have some topics today, don't we? Let's uh let's dominate today.
Yeah, let's do that, dude. First, before we get to that, want to just make sure people know what the Mortgage Show is. We do this every month, ideally. In this case, every couple months. We're getting on here. We're talking about things going on in the mortgage industry in general, rate stuff, economic news, things like that. But we're also talking about products, guideline changes, things that our borrowers or referral partners might find some interest in. So I want to say that off the top so you guys know what you're getting into with the Mortgage Show. It's a fun little thing for us to do. It's basically the only time I freaking talk to you is when we're doing podcasts. So it's nice to see your face.
I think it's so funny how often we cross paths. That's what it is though. We're just busy, man. I get it.
Yeah. It's pickleball or podcasting. Even today, I was walking out of the office. I didn't even think you were there. And then I saw you, your door was closed. I'm just yelling through the glass door that I'd see in an hour. So here we are.
I what's funny is we're in such different phases of our lives too. Like work is busy, but also you have a million things with kids. And as soon as I get out of work, I'm like, what am I going to do today?
I can't even imagine because right now we're summer break for the kids, right? There's different camps. Like we're on a field hockey camp this week. I don't know what it'll be next week. Probably nothing because it's leading up to the 4th of July. But like, dude, I should not even work in the summertime. I should just be a professional driver for my kids to get picked up and go to and from things. Like I I don't know if it's always been this way or if I'm just kind of in the middle of a weird time with it all, but it is hard to work and then get my kids where they need to be on a daily basis.
Dude, you said Aubrey's going to be a freshman the other day, and I still can't wrap my mind around what happened to this girl that I saw this video in the neighborhood when you lived with us, where Aubrey's singing and you guys are filming her, and she's like 2'2", and now she's going to be a freshman in high school. It's like, I don't feel like all that time's gone, but it is.
It is. It is, dude. And we talk about the same thing with Haley, man. I remember when I first moved in the neighborhood and we had Haley's third birthday party. And now look at her. I see her at freaking Scarborough Grounds all the time. And it's just like, what happened there? So, and I know she just turned 22, right?
She just turned 22, and actually, I have some news. I don't know that I said this to you yet or not, but so she took a sales job in Boston.
Oh, wow.
She's got a roommate in Boston, and she moves next Thursday now.
God. How you doing? You gonna get emotional, dude? How you feeling?
I'm feeling okay. I don't know how to like process it. It's not like a negative thing. I'm definitely feeling something, but it's just wow, my little girl's not a little girl anymore. I mentally, dude, mentally on my end, I feel like I'm 25 still. I look in the mirror and I'm like, "Oh my God, I'm 48. I'm clearly 48." I don't know. When it comes to Haley, all of the timelines are built around when I became a father, and here she is going to do things on her own. That's interesting.
She's gonna do great, man. Give you a reason to get into the city once in a while, too. I don't know if you have any interest in going down there, but might be an extra time to go down to Boston once a month or something and enjoy
Y-
that.
Yeah, that's what I'm looking forward to. And also, random thing last night, I was looking up where she's going to live. It's slipping me right now, but it's in the area that Aaron Hernandez lived. Bill Belichick had a house down there. Is it Brookline? Is that?
I don't know.
Yeah, I think it's Brookline. But anyhow, yeah, it's like an hour and 40 minutes from the house. So yeah,
Good
wow.
stuff.
Yeah,
Love it.
my little girl's leaving.
So exciting stuff for all of us, man. Summer's gonna fly by. I want to talk mortgage stuff, obviously, but I do want to bring a little bit of cheap seats in here because I don't know when the next time we're going to do a cheap seats pod, talk some sports, and just like real quickly, because I know people would want to hear about mortgage stuff. But what are your thoughts on the Giannis trade and us not trading Jalen Brown? How you feeling
Yeah.
about that?
So I thought if that trade did happen, that would have fixed it like a big issue that we have. Like I would have missed Jalen, full disclosure. I would have been nervous about the age and the recent injury history with the Greek. But we have a big issue right now. It was exposed against the Sixers. I think it would have been exposed in the championship if we played the Spurs. Brad's still got some work to do. But I mean, I'm excited to have Brown around still. I'm not even am I sold on the fact that they're still not going to trade him? I don't know, but I don't know. What do you think?
Feels like they're gonna, dude. I don't know. I don't know if like this time of being dangled out in trade rumors was the straw that broke the camel's back for him because he's been dangled out there a bunch over the years, and I
Yeah.
don't know that he always loved that. But it seemed like this time a lot of people wanted him gone for Giannis. I didn't, so I'm kind of happy he's around, but I'm worried that things are just irreparable at this point, and now we're gonna have to trade him for something worse than Giannis. So it kind of feels like that's what's gonna happen, but hey, who knows?
You know, if you go with the Jays from here, that's not a bad thing. There's some redundancy to their games, and I think at times they just kind of sit around watching each other and they get stale. I thought the Giannis pairing with Tatum would have been nice. If it was like 6 or 7 years ago, that would have been great, even best case scenario. But I don't know. Someday those two will not be playing together, and I hope the guy that makes the decision about that plugs in the right guy because some.
Yeah. Hey man, I don't know that the other shoes dropped yet, so we'll be watching and we'll talk about it on a pod at some point. I just don't think we're doing a cheap seats. NBA draft finals, free
Yeah.
agency conversation at least in the next couple of weeks. I'm sure we'll have something on the books, but might not be till mid July.
Something I do want to hit you with is should we bring up the Casablanca Cruise here on
Ooh,
the pod? Yeah,
yeah,
yeah.
let's do that. So Beds and I are hosting a cruise, a night out on Friday, August 21st. It's on the Casablanca. It's a boat that goes around Casco Bay. We have an awesome band, Hello Newman, do 90s like rock music. They'll be playing on the top deck. I think we have like 135 tickets to sell, maybe accounted for half of those already, but we haven't really been pushing it too much. If you guys or anyone that's listening has interest, shoot me your beds a text. We're kind of doing a guest list thing where we just manually add you to a list, and then you'll have to Venmo us the money. It's $75. Any profits that we have are going to the Biddeford Education Fund. That's a fund that is attached to the Biddeford School Department, pays for equipment for people that need it for sports, music, arts, whatever. So, anyways, be a fun night out in Casco Bay, plus raise a little bit of money for a good cause. Should be fun.
So you just dominated that. Thank you.
I was just kind of feeling it. But,
Yeah.
dude, it's going to be a freaking blast, man. We did this. I used to do this with a buddy of mine named Jordan Field years ago. I think we did it 3 years in a row. It was a great time. So, probably haven't done it since before COVID. So, it'll be good to kind of go back to that.
How many of these have we been on? Just outside of yours. I mean, they were awesome.
Yeah, they're fun. I mean, let's just hope for a good night, but it's Friday, August 21st. So, that's not that far away. I think of this as like an end of summer fun night out, but and we have a long ways to go between now and then, but it's going to sneak up. So we gotta get these tickets sold. People that want to come need to let us know. We need to add them to the list and get some money for the tickets.
$75 a ticket. Like you
There'll be
said.
food on board. Food's included. So there'll be a bunch of food. The way they structure things and the cost for us to do it, it makes sense for us to get a bunch of food, which we'll have. So our goal, I think, would be people don't have to like go to dinner before. They could eat dinner on the boat, pay for their drinks at the cash bar, and then dominate up on the top deck.
It's gonna be amazing.
I don't even drink anymore. I might drink for this tonight. We'll see. It might come out of retirement, but
Man, I saw you last week and I had drank and I regret drinking. I don't like drinking anymore for the record. I don't do it as often. I actually very infrequently drink now, but when I do, I'm like, number one, why did I drink? Number two, I'm not going to drink for the next couple of months. And then I'm going to do it again, and then I'm going to hate it again.
dude, I know. But you're in that point where you're like, hey, what am I going to do today after work? It's really easy to go do something fun and social. For me, it's just easy to hunker down and chase my kids around on a softball field. So it's the opportunities are probably more for you than for me right now.
Exactly. Like tonight, I got the club, and then we're going to JJ's Eatery, I think, and one of our buddies is playing for 2 hours. And I'm telling everybody I'm not going to drink. I'm going to have a couple drinks.
It's hard not to. Yeah. Should we talk mortgages?
Where do we start?
We got 10 minutes in without any mortgage talk, which I love. But let's dig into a few things. So last week, Federal Reserve met. It's the first time with the new Federal Reserve Chair, Kevin Warsh. I believe that's how you say his name. It was his first meeting in charge. What happened, Beds?
It seems so. In the past, everybody was really focused on Fed language, the traders, investors. After a Fed meeting, it just seemed like that was the Fed meeting was the pace car for what would happen with trading, which way interest rates were going. This Fed chair, he almost just came out and said, "Look, yeah, you're listening to our meetings, you're listening to our information, but we don't want this to dictate the next 3 or 4 weeks. We want you guys to focus on what's happening day over day, month over month, the projections and how you guys trade from here. should look different compared to other Fed presidencies. So I don't know. How does that translate? Will some of these traders actually adjust? Who knows? Will he actually stick to that thought process? We'll see. But I don't, Randy, we'll see what happens from here. But what did you think about his notes?
Well, I mean, I get I get him wanting to dictate how people trade, but like the reality is people trade on all the information they have. And if they trade based on like the notes and the sentiment and the comments that people make on the Federal Reserve board, then I don't know that that's going to change. Again, that's just like a football coach saying that he wants this story to not be the story. I want this thing that you don't get to control the way people react to the information that they have. So I get it. That's nice. But like they chose not to lower rates last week, which is what the expectation was. There were some hints that there might be even some rate hikes
Yeah.
by the end of the year, which is a big change from where we were not that long ago. So that kind of changes the market a little bit. Inflation's at the highest point that it's been in the past 3 years, I think 4.2% annualized. So that obviously puts pressure on rates to stay high. And I think last time I checked, the 30-year average that gets aggregated throughout all the different rates, however they measure it, was like 6.66 or something like that as the 30-year fixed rate, which is a far cry from where we were back in February. So I don't know, dude. The market reacted poorly to their meeting that day, recovered a little bit. I don't know that there's been a big change though. When you look back to last week, we're still above 6.5.
Yeah, it was still about 6.5. So oil obviously put some upward pressure on pricing, which causes inflation, all of that stuff. Actually, today, as we film this, the price of crude is actually at pre-Iran levels.
It
So
was
I'm
like
kind of,
$75, below $75 a barrel or something. I
yeah,
saw,
I think it was at $72 when I was
which is
looking at
great.
earlier.
Which is like such a big part of all this stuff.
It's such a huge part. So yeah, actually, it's at $70.47 right now. So the cost of deliveries to the cost of everything, every oil affects everything. In theory, that's going down, hopefully. So hopefully that translates with mortgage rates.
Yeah, I don't know. People ask me all the time what I think is going to happen with rates. I don't know, dude. When I have someone that's under contract, I try to lock them as soon as I can, just because rates wouldn't surprise me if they were at 7% in 2 weeks, but they also wouldn't surprise me if they were back at 6. Like it's a crapshoot right now. So let's just freaking lock these rates when we're under contract, and then we always have an opportunity to refinance using our rate rebound program or take advantage of something like that in the future.
I like that thought. Rate rebound's huge. I'm actually gonna go in here while you can keep talking, bud. I'm gonna look at something though with the trading just to tell them what's going on with interest rates. I think we're sort of sitting in this interesting area now with mortgage-backed securities. Today's a really good day, by the way. We're up 33. The 10-year treasury is down 10 basis points. We keep So there's a bunch of moving averages: 200-day, 100-day, 25-day, 50-day. We went below all of them when Iran started, so interest rates popped up a little bit. Now we're recovering. We're like 50, 65 basis points away from the 200-day moving average again, which would be huge to be above that. That's usually the area of trading where the momentum pushes interest rates down. We're flirting with that again. We're getting there.
That would be fun. So I hate spending so much time at the top on interest rates, but it's just such a big part of what we do. People think we're the experts on this stuff or that we have predictions that mean anything. The reality is we're just trying to digest this information just like everyone else. So we'll see what happens.
Day over day, it's comical sometimes.
Yeah, yeah, it really is. But okay, I want to move on from rates. The next thing I wanted to talk about was Maine state housing, some rate and income changes because this happened a couple months ago, but I think it's worth sharing because we try to talk about Maine state housing when we can. Maine state housing is kind of this umbrella that gets applied to other government loans, rural development loans, VA loans, FHA loans, where it offers the borrowers a very low interest rate, lower than the market, offers a credit towards closing costs if you're a first time home buyer, gives an even bigger credit towards closing costs and down payment if you're a first generations buyer. So there's a lot of moving parts though. Rates are set by Maine state housing, there's income limits, all that stuff, and some of those things changed. And I was hoping to share some of that info, if that's cool with you, Bids.
Yeah, let's do it. So obviously that income stuff went up. How much did it go up?
The big places I would focus on right now, like York County, for example. and it's broken down a bunch of different ways, but 1 to 2 people in the past, it's not so this isn't much, but in the past, um, I think it was $112,000. You couldn't make more than 112,000 and buy in York County. That went up to 116,000, which is not much, a 4,000 increase.
Yep.
In Cumberland County, though, it went from 115, which went from a 111 to 115. Portland and that whole general area went from 129 to 139. York and Kittery went from 128 to 132. So it's like all of the income limits that applied in the past, you add $4,000 to $5,000 to those, and that's what it is. I think it's comical that the greater Portland area and then like York and Kittery and very southern Maine are in the 130s, 132 and 139. Yeah. And Biddeford, Saco, Sanford, Kennebunk are all at 116. Like there has to be a world where they line those up. It makes no sense. It's just as expensive to live in these areas as it is those areas. But for whatever reason, York County is just in a different area.
I think what happens with your thought is that it never allows anybody in York County and Cumberland County to use the product, because it's like for what people are carrying for bills, what you need for income to afford today's pricing, it's just extremely hard for that program to align in those two counties. I have an agent, Randy, that sends me business north of that. And it seems like there's always an opportunity for Maine State Housing. Out of curiosity, do you ever, or have you run into the last couple of years where it's York and Cumberland County, somebody actually fit and was able to use that program?
It's usually away.
Yeah.
Yeah. It's usually out of York and Cumberland County. Well, the other aspect of Maine State Housing, these are government loans. There are preconceived notions that listing agents have of these type of loans being difficult. So in a competitive area like York and Cumberland County are, if there are multiple offers and some of those offers are cash or conventional financing, sellers are still going to gravitate towards those type of loans over any type of Maine State Housing backed loan. So I think for that reason, you don't really see them in this area. But if you go someplace a little bit more rural where a property's been sitting on the market and there is less competition for it, they'd be more likely to accept offers for Maine State Housing.
I'll be curious too to see when they're going to adjust their interest rates, now that it seems like interest rates are starting to inch down a little bit.
So their rates have already dropped.
Yep.
So why don't we go through that? And I don't know if you think that they would drop beyond this, because I'm pleasantly surprised with where they're at right now. So where is it? Right now, the 30-year fixed rate for Maine State Housing is 5.575.
Yep.
Which is just such a weird rate. A rate that we wouldn't, like, everything moves in eighths of a percent. So for whatever reason, Maine State Housing chose 5.575. If you're a first generation borrower, it's actually 1% less than that at 4.575, which is freaking phenomenal. And then Salute Me, which is the VA version, is 5.075. So like great rates, because when I tell you before, rates are generally, even for FHA, are into the sixes, if not mid sixes. To get something at 5.575 or a little bit less than that, depending on your situation, that's a pretty good thing for people.
I thought my thought was just skewed because I had somebody just pay some points on a government loan and it ended up being 5.99. So I guess in my mind there, I was a little skewed. Where was our lowest? I think my lowest closing was a 4.5 a couple years ago for the first gen. I think the first gen was at 4.5,
which is what it's at right now. So it might have been it touched that. Like, so there was a period of time where rates for Maine State Housing dropped, and then they went back up to what they were previously, and now this is reduced from that. So it might have been, you might have caught that window where first generation was 4.5, but that's right around where it's at right now. So
nice.
I mean, it really, I continue to think that this is the best type of loan for first-time home buyers. Whether or not they can qualify for it because of income limits or debt to income ratio restrictions, or if they can get an offer accepted, those are all like asides. But assuming that all of that always worked out, this is definitely the best loan from a rate, down payment, and closing cost point of view.
It'd be so great if we could use it more often here in York County and Cumberland County, wouldn't it?
Totally. But just keep trying to spread the word on it. CMG is the first or second biggest Maine State Housing lender in the state in terms of volume. I don't think number of transactions, but as far as like actual loan amount that it's facilitated. So we definitely do a great job with Maine State Housing.
And they're not hard to do.
They're just...
Dude, pay attention to your DTI. Make sure your DTI works. Order the bond, get the interest rate. Hopefully the property is in the physical condition that it passes their standards in best case scenario.
Yeah. So don't sleep on Maine State Housing. If you're listening to this, you have questions about it, reach out to Chris or I. It's definitely something we're trying to talk more about with people all the time. So I had one other thing to talk about.
All right, what do we got?
And we talked about it, I think, on a previous podcast, but we're at the point where I think it's timely and it's something that real estate agents should hear about. It's the changes to condos that are coming up next month and then again in January of 2027. Can we run through those?
You know what? I'm going to let you cook, baby.
Yeah. So starting next month, which is only a week away, or a couple weeks away, I think. I forget exactly what day it is in early July. But to finance a condo, we now need a full condo questionnaire, regardless of how much a borrower is putting down. So just to add some context, whenever we do a loan on a condo, we need to get a bunch of information on the condo itself, right? Because you're not only underwriting a borrower's ability to pay back a loan when you're doing a condo, you're underwriting the condo and its ability to support itself, and whether or not it's a good condo association from a financial point of view. So there was always two levels that we review. One was like a full condo questionnaire where we'd get all of the information that we could possibly need, and whenever we do that, we're probably going to uncover some issue that's going to cause problems for financing. Or we do what's called a limited review. If the borrower was strong enough, they were putting 10% down at least. This limited condo questionnaire was just like some of the basics. It just didn't get into all the stuff that the full condo questionnaire got into. Effective next week or the week after, limited reviews go away and everything is a full condo review. And I think that that's going to be really shocking for some people, because let me ask you this, Beds. Have you done a loan for a condo? I mean, you don't have to get back to me with the specifics, but have you done a loan for a condo that wouldn't have worked if you had to do a full condo questionnaire, but did because were able to use a limited condo questionnaire?
So that's an interesting question, because I was just going to comment the limited allows you to sort of cover up maybe something that was lacking inside of the condo association. And I haven't had a transaction in a while where it's like limited versus full really helped me, but in the past it really has.
Yeah.
So,
Yeah. I mean, it's been a while. I mean, we've been doing these loans for 15, 20 years at this point. So there are definitely loans in the past that I've done that, we had to fight to get a limited review. Like we had to have the borrower come up with more money so we could do a limited review and not uncover this thing that would have caused a problem. And now it just doesn't matter. And I just think that real estate agents, buyers, sellers are going to be in for a little bit of a rude awakening. There's going to be people that bought a condo a year or two ago using a limited condo questionnaire and they were able to get into it. And then when they go to sell, they're not going to be able to sell it, at least to a conventional borrower, because there's problems with the association. And they're going to be like, hey, I bought this place 2 years ago and so-and-so lender didn't, wasn't a problem for them.
yeah.
And they're going to not realize that this is the change that just happened. And that's why it's a problem now and it wasn't then.
So some advice here for real estate agents. We talked about this on the last pod is like, I know you're fighting for listings and I know there's certain comforts in doing that, but when you secure the business, a couple of things that would help us and help you to sell the listing is know who the president is, know who the financials are being done by, ask the questions, ask any question about the association. Hey, how is it? Is there any pending litigation? Is there any issues right now? Because when you put that property under contract, the buying lender is going to need some information. It's going to come out. So you might as well sort of fact check it, if you will, while you're trying to obtain the listing. It's going to help us out. It's going to help you out, and it's going to help us out in the long run.
I don't know why more listing agents don't reach out to me or you to get a condo questionnaire done on the front end when they have a listing secured in the condo association. That would be the first thing that I did when I got a condo listing, so I could have this condo questionnaire completed, obviously know who the president is, the treasurer, who does the insurance, like having all that information ready to send over to someone like us is hugely helpful. But if you got a condo questionnaire done and ran it by us, we could run it by our condo team. They could say, yep, this place is good to go for conventional financing, or no, it's not, and here's why. And it would allow you to accept offers from various buyers with confidence on behalf of your sellers. Like it's almost like you'd be doing a disservice to not do that for your seller, because all of a sudden you're accepting this conventional offer that you're going to wait 3 weeks and find out that can't be financed conventionally. So it's like, just do this legwork up front. That would be my advice.
Yeah, number one, good use of disservice. Number two, our condo team is amazing, aren't they?
They're awesome.
Yeah.
It's very easy to lean on them for this sort of stuff.
Yeah, so Randy and I are qualifying borrowers. We're talking about these things that would help us in financing. But for the purpose of full disclosure, when we get a property and we start working on it, a property that's under contract, we just plug in these pieces of information and our condo department just starts cooking. They reach out to the president, the treasurer, the insurance companies. It's really awesome to have that sort of support from an LO side because you know how busy we can get. So it's like it fills it removes a 3 or 4 day window when you're just super busy and you can't get to that as you're working through your loans. So it's really nice.
So we're super lucky to have that. That's the change that's happening in July. In January of next year, there's going to be one other thing that might cause some problems for some associations. And right now, the rule for lending is that any condo association must dedicate 10% of their budget towards reserves. And in January of next year, that's going to have to be 15%.
Yeah.
And I think that's going to be fun. I mean, it's first of all, that's going to cause condo association dues to go up right off the bat. So, like, I would expect people's condo association dues to go up because right now you're budgeting for 10%, you need 15%. That is a difference that's going to be passed along to the owners. There's no doubt about that. But my thought is that places that are professionally managed are probably going to be more aware of this requirement, and maybe they'll up the dues and be good to go. But then there's all these other places that are just managed by some dude that goes down to Florida in the wintertime that has no clue about any of this stuff. And then they're going to get the budget. Someone's going to try to buy a place and they're going to get the budget. And it's going to be 10% going towards reserves and it's not going to qualify and it's going to be a problem.
It's going to be an interesting time, actually. Hopefully, not a negative one, just hopefully where everybody just starts adjusting as quickly as possible so financing doesn't have an issue.
I think the best thing that we can do on our end is just spread the word on this sort of thing with people. And I've been trying to do that for people, not in a scare you kind of way, but it's just like you need to be ready for this because the last thing I want is to do one of these deals and that something goes sideways. And I would be in a position to be like, listen, I told you this. You know, like
Yeah.
I would never say that to like I don't love to do like I told you so's to real estate agents or buyers or really to anyone, but I know that like I would be thinking it if something comes up sideways. It's like this stuff could have been sorted out if you had just listened to us a few months back.
I love that line. If you just listen to us.
Yeah, I think it sounds worse than what I really mean it, but yeah, in a way, it's like this is the stuff we've been beating the drum on for a while, and I think people just assume that it's going to work itself out. But I know at some point it'll be an issue, and people will be like, "Well, so and so did a loan on it, no problem," and I'll just be like, "Ugh."
Yeah. Yeah. The adjustments of mortgage products from when somebody does their last loan to when they're talking to you. It's happened so many times over the years.
Yeah, get that line. Yeah, you so and so they didn't have any problems. Okay. What else you got, Beds? Any other good stories or
Yeah. Yeah.
good
So
info?
yeah, I'll tell a quick transaction that I had, and I think there's two parts to it that I'm proud of. The first one is how quickly we did it. So I got the transaction on the 8th, and I ended up closing it on the 18th. So
Nice.
I just really love production, between underwriting and closing, how quickly we are to react to things. I think you would agree with that. It's just our process is really good. The borrowers were amazing in the whole equation, so I can't take all the credit for that because the borrowers I they make it happen. But the part that I like the most, so we saved this deal because Rocket Mortgage messed it up. Actually, maybe that's a bad sentence. I don't think the loan officer sort of positioned the loan correctly with underwriting. And this is the story. Borrower, husband and wife live just outside of Washington. They want to move to Maine. He has a job in Washington. He cannot vacate. He has to go to it every day. He has a pile of time off. So in his mind, it's like, all right, I'm giving my family what they want. They're going to move to Maine. Okay. I have all this vacation time. I'm going to take Fridays off, Thursdays off. I'm just going to do the long weekend thing for as long as I can handle it. Maybe I'll find another job eventually. So here's how I did this. And he wanted to put 3% down. I took the husband as a non-occupant co-borrower. I made the wife, who did not have a job, the primary. The non-occupant co-signer, the husband, had enough income to carry all the debt. The new house, the vacating, they're going to sell their property eventually. He's going to live with his mom in the area after the house sells. But yeah, I got these people a 3% down loan, conventional, in what, 10 days?
Well
Yeah,
done.
pretty awesome.
That is awesome. Yeah, I should be proud of that. I mean, great job by our team. Great job by you. That is really the way to do it because he can't be a primary borrower just given the stuff you said with the. I mean, I can understand the thought process. Like, yeah, I'll just fly back and forth, but like you have to live certain proximity to where you're going to work for it to be your primary residence and stuff. So, but that's a good solution, good way to make it happen.
I think what was neat about the thought of taking him as a non-occupant co-borrower is the fact that like not everybody's household is like traditional these days. Think of an athlete. He's got a family that lives in a home somewhere, but he's traveling from city to city, entertaining people playing a sport. You know, why should he pay worst case interest rate scenario when his wife is living in the house or the spouse is living in the house? That's kind of how I looked at this one. Why can't I take this guy as non-occupant co-signer? Yeah.
So, hey, good stuff, man.
Thank you, sir.
I don't have any stories for story time now. I'm just happy to share the information that we did. Maybe we'll do a story time podcast when we just kind of rip through a bunch of deals that we closed and some of the learnings from it. But I don't have anything else. If you don't have anything else,
That's it for me, buddy.
dude, solid half hour, some mortgage info, little Giannis, Jalen talk, a
Yeah.
little talking about the kids. So it's a good pod, man. Glad we did it.
Goodbye to my Haley.
Next time, Haley will be living in Boston. Next time we record, we'll be looking for an update. But all right, pal. Well, that sounds good to me. Good pod.
All right, buddy. Thanks for listening, everyone.
All right. See you guys.